Hello, and welcome to the Fintech Times Podcast, focused on discussing the latest fintech news and trends internationally. Established in 2016, the Fintech Times is a global multimedia news outlet centered around the world's first leading fintech newspaper. We report all the latest and brightest ideas from the fintech world.
Welcome back to the Fintech Times Podcast. My name is Mark Walker, and I'm the Editorial Director here at the Fintech Times. Today, we're going to be talking about open banking payments. One of the key motivations behind open banking has been to enable the growth of alternative payment methods to cards. This report, produced by TrueLayer, demonstrates that the policy drivers, the industry development and the innovation have all worked together to deliver that alternative in the form of open banking payments. To discuss this and our general topic, I have with me today Roger Dieth. Right, so really good if perhaps, Roger, you could give us a quick introduction of yourself, the role and the company you're representing today.
Yeah, no problem. My name's Roger Dieth. I'm the head of e-commerce at TrueLayer. So we're a leader in open banking. We're live in 12 markets. We're funded in 2016, I think. And my role really is to kind of head up this new e-commerce vertical. So thinking about not only, commercial things and go to market, but also what are we doing in terms of marketing, customer success, products, everything else, because we're really excited about where open banking can be applied for e-commerce merchants now that we've kind of got out of just, other fintechs using this technology and actually moving into the mainstream.
That's really interesting. And obviously, we know that you commissioned a report, The Future of E-commerce Payments, which I'm going to pick a few little bits out of as we go along, if I may. But on that subject of sort of open banking payments being ready, as you said, there's been a lot of talk about it. There's a lot of people that seem to be using open banking just to check people's balances and this sort of stuff. Is it really kind of ready? And how do you see the sort of definition of open banking payments specifically?
Yeah, I think this is... I think when open banking first came out, the focus was very much on the data use case, and I think that's still really important. We think at TrueLayer that the payments use case is kind of the killer application. We're seeing huge growth in this. The data that we can see and you can see as well is year-on-year growth on payment volumes is 500% in the UK. So this is really taking off in terms of the adoption that we're seeing across the board. And actually, that payments process is somewhat clunky and broken today. And I think open banking gives us a real shot of changing the payments landscape in a fundamental way. Something that's actually easy to use, just click on your phone, 3 taps and you can pay for something. So you have that consumer ease of use, but it has really big benefits for the merchants as well in terms of, some things that currently are a little bit painful on the current payment methods, whether that's wallets or even credit cards and these kind of things.
Yeah, so it's kind of interesting because when you sort of think about the sort of the potential of open banking payments, is what we're effectively saying is almost cut the card out of the whole process. And obviously for those of us in our audience that will know about sort of card issuing schemes and processing, there's a massive sort of cycle of sort of things that need to happen just for a payment to happen. And there's also the subject of chargebacks, which was effectively a concept purely invented and regulated because of consumer issues with getting refunds. Maybe touch a little bit on that as to what the history was and where the sort of the open banking payments really sort of comes in on top of that.
Yeah, no, I mean, I think you touched on it in some ways, but I think like a lot of things, if you speak to payments experts, they live and breathe this stuff. They understand that there's around 5 middlemen. There's a PSP, there's an acquirer, there's an issuer, there's a card scheme, payment processor. I think I've got everyone. That's all the people that you need in this chain. And they're all making a living, right? So they're all taking a cut, and there's a lot of complexity in knowing where your payment is, which, is just by dint of the fact that this, this payment rail, if you like, was invented in sort of 60s and 70s in America, right? And I think all the changes we see in that payment method are trying to fix some of those things, or it wasn't really designed for a digital age. So I think the big opportunity in open banking payments is, a provider like TrueLayer initiates the payment, and then it's a bank-to-bank payment. There's not these 5 other people in it. There's the consumer's bank and the merchant's bank, and TrueLayer in the middle, and that's it. So that lack of complexity adds to speed, but it also massively reduces cost, because essentially there's not a lot of providers in the middle there, which is pretty attractive for merchants. You touched on the other thing, which is around chargebacks. I mean, consumer protection is obviously really important, but part of that chargeback mechanism, you said, is because it's very hard to keep track of where your payment is or where it is when you're refunded. In this new model, there isn't a chargeback mechanism per se, but it's very simple to go back to the provider or the merchant and ask them where the funds are if there's an issue. So I think actually some of that simplicity makes this work both for the consumer and for the merchant.
That's the kind of the point that I was going to sort of make on it, because you've stripped away all these additional people within the cycle. Effectively, a chargeback on open banking payments is just a simple reversal of a payment.
Yeah,
in that respect.
Yeah, I think the Achilles heel, and let's be candid here, there is this concept of a reversal for an open banking payment, right? We don't think that works properly as a refund, right? And the reason it doesn't work is if you're a merchant and you have to issue a refund, what you're essentially doing is you have to authenticate, that payment back. It's like making another open banking payment back to the original provider. That's partly why my role exists in TrueLayer, is because at the start of the year we launched something called Pay Direct, but essentially it's using a combination of open banking plus our own merchant account, essentially, which allows people to do a payment instantly, so you get the funds as a merchant straight away. But critically, if there's a refund request, we can then we already know where that fund came from, so we can reverse the payment instantly as well. And for a consumer, that means you can get the money in cash back in your account in 10 seconds. So this is a real game changer, because it's not just about saying, does refunds work? I think, unfortunately, in the pandemic, we've all had a lot more experience with refunds and refunds processes, right? Whether it's airlines or concert tickets or anything else. And it's clear it doesn't work well today, right? There's a lot of examples. I was speaking with a travel merchant the other day where they're saying, they couldn't provide the particular holiday, so they refunded the client onto their card. But because that took 5 days and they were actually leaving in 3 days, they didn't have the money in their account to rebook, right? That is a big problem today. And I feel like, the merchants are trying to do the right thing by processing these refunds, but because of the complexity, the money doesn't arrive back in the account. So it's a real opportunity, I think, to change things.
Yeah. So as you say, from the merchant's perspective, obviously they want as simpler a situation as possible, and I guess also as small a number of people within the chain, because obviously they've got their charges that they're having to pay for, their terminals, they've got their charges they're having to pay for their banking facilities and everything else. So is that one of another major reason for the merchant, or is it much more about customer experience? If you were to give percentages?
Yeah, I mean, I think, the key, it varies from different merchant, right? So I think the fact that it substantially reduces the transaction costs for people who are in either where their basket size is much higher, obviously because card fees are typically a percentage. So if you're paying for expensive things like a Rolex online or buying a car or whatever it is, those fees really start to mount up. So anything we can do to reduce those fees is important. But as you say, it's also about removing some of the chargebacks. And there's also the fraud element as well. So, the fact that today, card not present fraud represents, 76% or something of all the fraud that you see in the UK. And it's because, obviously, it's relatively easy to get hold of 16 digits, the name, and the expiry date, and another 3 digits of numbers on the back, right? It's relatively easy to do that. With open banking payments, the authentication is actually directly with the bank, right? And when you're making the payment itself, you're not entering any card details. There is nothing to steal, right? There is no secret number to steal, right? You're either logging it, you're either authenticating it with the bank, or you're not processing the payment. So we actually think there's an opportunity there as well to kind of lead with increased security and reducing the fraud for both the merchant and the consumer.
Just thinking a little bit about that sort of liability of where the liability for fraud lands. Is it the same situation in the current card model as it is with the open banking one, or do you think that's simplified in a way as well?
I think because, as we touched on, because there's less people in the chain, there's less things to go wrong, right? And I think it goes back to that idea that as a consumer, the only way you can make a payment with open banking payments is if you log into your account, essentially, and you've authorized that payment directly. There's kind of no way around that. So the chances of there being a fraudulent situation are less. Essentially, the only way fraud can happen is if someone has full access to your bank account, which obviously is a serious situation, and the banks will have to resolve that. But that's a very small percentage of the fraud cases compared to, buying credit card numbers online. So, as you say, because the surface of fraud, the amount of fraud is substantially reduced, and the ways you could be defrauded are much less, it actually makes it an easier situation for everyone.
Yeah, I think in your report there was a wonderful statistic that stuck in my head, which was 45% of all card payments are fraudulent, which is astounding when you think about it. So almost 50% of everything anybody is doing on a card is a fraud case.
It's insane when you think about it, right? But it's because, as we said, it's because you're going back to, it's numbers on a piece of plastic, right? There isn't inherent security built in. And I know, obviously, card schemes are working hard to increase security by adding in things like SCA, right? So that's their, that's their implementation, this secure customer authentication, which allows, an extra authentication step with certain payments, which will increase security. But it comes with a cost, of course.
Yeah, and I think, again, in the report, which is obvious when you think about it, it's extra steps in that payment decision. So a consumer, the more buttons that a consumer has to press, the more apps they have to open, the more things they have to do, the more chances they are of dropping out of their basket, dropping off of their transaction, and just saying, no, I can't bother with this, let's do it somewhere else.
Yeah, and we've already seen that because obviously in the UK, the implementation is coming in finally next March, assuming it doesn't move again. But in Europe, where they've already been living in this world, we've seen stats from major payments consultancies saying conversion has been impacted by 30% in some cases, right? Which is a huge hit to people's revenue. So, it feels like a bit of a Hobson's choice. It's like, well, either you accept fraud or you reduce your conversion. We think, and, we're talking to merchants today where they're saying there must be a better way of doing this, right? There isn't, the SCA approved version of open banking is just open banking payments, right? Because the only step is an authorization step. So we compare the two, and, typically it's about 5 steps for an open banking payment where you don't have to manually enter card details versus around 10-ish for a SCA compliant card process. So it's just going to be more painful for the end users.
Yeah, and I wanted to sort of touch on sort of maybe some specific examples, because I saw again in the report that there was a case study for Kazoo and what you're working with them, and I don't know why, but for some reason in my head when I'm thinking open banking payments, I think of smaller transactions, £50, £100, almost like a contactless sort of replacement. But obviously that's quite a different purchase when you're buying a car, I guess. So was there any specifics that made open banking much more suitable to that higher level purchase, do you think?
Yeah, I mean, Kazoo have been a great partner with us, right? And I think it's also, a testament to their innovation and, what they've been doing in this space. But I touched on it earlier, so some of the payments, some of the pain I was going to say that you get around payments is worse the more expensive it gets, right? So, your percentage charge doesn't change if it's £10,000 or £1,000 or £100. So, you pay 1%, but that starts to look quite expensive when it's £10,000. So that is part of it. It's also about customer experience. So, people were using manual bank transfers to make these payments. This is obviously a massive step up in terms of ease of use. And also, there is a cut-off where cards stop working, right? So it's around £2,000, £3,000. Actually, the cards just say, no, we're not going to accept that level of spend. So there's a point where actually moving to open banking actually means acceptance is going to work.
when you say there's a limit, so maybe explain why is that limit at 2,500? Is it purely because of a risk appetite for banks? And
Yeah. So I was going to say, it's not a hard and fast limit that's coded in there, but what you see is the acceptance rate starts dropping off right at that point, and it does vary between card schemes and these things, but it's all based on that that risk profiling, and obviously the higher value, the higher risk in the card scheme's mind. So that's why you see this drop off. So I mean, Kazoo is interesting because we started almost perhaps with the hardest use case, so like buying a car online, one-off purchases. I think what's really exciting, and it kind of shows the way for where open banking is going to go in the future, is actually the thing that really kind of has delighted their customers is the process where you sell your car to Kazoo, right? So you know, they obviously, you can buy a car from them, but I might have a Volkswagen Golf that I want to sell to Kazoo. What they've done there, which I think is really clever, is when you sign up, at that point you do an AIS score, data-based link to your account. So what that does is Kazoo then know it's definitely Roger Diath's account. I definitely control it, and I've definitely got the right details. I've not mistyped the sort code, the account number. I can be sure that's the right details. When they go and pick up the car 2 or 3 days later, they give it a once over. Their representative has an app, and they go, yep, it is what you say it is. Thanks for the keys. And when they click a button on the app, we then facilitate the payment to them instantly. So the whole car selling process then becomes this super slick, easy process powered by open banking. If you go Google Kazoo Trustpilot, all the reviews at the top are all 5 stars, and they're all like, easiest way I've ever sold my car. I got the money instantly. So this is where I think it gets quite interesting, where you're talking about sort of a data-enabled payment, right? You're doing something you can't really do with the current infrastructure, and it actually changes the customer's perception. And actually, most customers aren't thinking they're doing open banking. What they're thinking is, when I sign up, it just says, oh, if you want to get paid quickly, just click to link your account. Oh, yeah, that makes perfect sense, right? And for them, and then they get the payment instantly.
It's really interesting when you think about it, because I guess when we talk about payments, we're always thinking about consumers paying out money into a merchant account, but actually that's a really interesting model when you've got someone like that sort of thing where they're paying money to, it is still a client. I guess it is still a consumer paying somebody some money, but it's reversed, isn't it? So it's the consumers receiving money back in exchange for their car, rather than them paying money to get a car. So
yeah. And I mean, and it's about de-risking it for both the consumer's point of view, because they know, you know, they really want to make sure they have the cash, and they don't want to make a mistake in terms of giving the details. Here, you can't make a mistake. But it's also a sort of fraud and safety element, right? So there's no way for me to get the money for doing this sale unless I really control that account. And we do a verification check as well so we go, okay, looks like it's Roger Diath's account number, and you think you're buying Roger Diath's car. So linking those two things gives an extra layer of security as well. And actually, when you think about it, there's loads of use cases like this. Think about supplier onboarding, right, for big merchants. There's lots of cases where you're thinking about making payouts as well as pay-ins. And yeah, that's where it gets quite interesting. And I think we're only scratching the surface in terms of the use cases here.
Yeah, I mean, there's lots and lots of different areas you can sort of start. My mind was already started going on about, HMRC, that's a great one. You know, you're paying a lot of money out and you want to get some money in, but you know, there's some really interesting opportunities which
they're trying not to pay money out too much, in my experience, but trying to just get the money in. But yeah,
absolutely. But yeah, so it's kind of like there's really lots and lots of ways of effectively what we're talking about is simplifying the payment structure after many years of just bolting and building new bits onto Victorian sort of architecture. We're now actually going, why don't we just throw that all away and do something a little bit different?
Yeah, and I mean, we're not doing something in this space, but it would make perfect sense. Like, if you've ever looked into how, this whole method large companies use to pay people, they pay people by issuing virtual cards, right? So they send them a card, basically, a virtual card number with £263 on it, And the way they process that payment is they then have to go to their point of sale machine and do it as though someone had just given them a credit card and they can only take that money off. But how many steps and complexity, and you're paying on the POS, you're paying and that's all because you just want to make sure you've really paid the right supplier the right amount. There must be a better way of doing this, right? That's insanity.
Yeah, absolutely. So thinking a little bit, obviously, I think we've talked quite a bit about sort of UK-centric open banking, and we've had some significant advantages. I would assume, or I would say, in the UK with OBIE and that sort of stuff. And I know you guys are doing an awful lot of work into Europe. So how do the sort of the structure set up there? Is it as simple as just doing the same thing but just in a different country? Are there any sort of major differences or drawbacks for merchants that are European based trying to use these open banking payment situations?
Yeah, I mean, I think what's great is Europe has also adopted open banking, both data and payments, but obviously Europe is fundamentally a much bigger place and much different country interpretation, country infrastructure. And, to make open banking payments work or data connections work, you really have to do the hard work of going to each individual bank and building the connections. And that's what we are doing and continue to do. So there is an increased complexity there when you go in. You also need to consider the payment rails. We have faster payments, but they have SEPA credit, but also SEPA instant. So, there's a lot of things you need to consider, but we've worked extremely hard to roll out across Europe so that we can offer, open banking payments, open banking data across all of Europe today. And I think, as the leader in this space, we always think, okay, where is the next market that's going to be ready for open banking? Where are the regulators thinking about copying either the European or the UK model? That's why we have a head of Australia and a team in Australia already, because they're just starting that journey. And we've already got our licenses in place to make sure that we're ready. As soon as it's available, we'll be there on the ground making it work. And I think that's what you'll see is as this becomes more and more successful in the UK and then increasingly in Europe, other countries will roll this out and we'll be there at the forefront as well to make it work.
Okay. Yeah, I mean, just thinking a little bit about that sort of adoption side of things, we all seen recently in the press and social media that Anne Boden's saying that open banking just isn't working. So what's your view on why do you think adoption rates are high, are getting higher now, but why have it taken to this point to actually really start accelerating?
Yeah, and I appreciate Anne's perspective on this, and obviously she's running a major bank, so she gets a very clear view of how this things work. Although I think mainly she was talking about the data use case, which I think is, we touched on with Kazoo. I think we really haven't thought about, killer use cases to some extent. Account aggregation has been was the thing that open banking was used for. I've got 5 accounts, I want to have a view of it. I think that has value, but is it the killer app that's really going to get people to use it? That's why I think, we've deliberately started really focusing and doubling down on the payments use case because, it really is better, faster, cheaper. Normally that wins out overall, right? And at the moment, we don't have an issue actually. When it's on a merchant's checkout, we don't have an issue with adoption then. The issue is getting the merchant to put it on the checkout in the first place. So, our largest customers see over 30% of their checkout traffic going to open banking. So it does work. People will use it and select it, well, just because it's easy, right? It just works, right? If I want to top up £50 into my free trade account for one of our customers, you could try and get out your debit card, try and make it work, or you just go click, click, done, right? And once you've had that experience, why would you do anything else? So I think the consumer demand is there, but what we need is more merchant adoption to allow the consumers to express that demand.
I think it's kind of interesting. I'm kind of drawing, as I was thinking of it, some parallels to contactless adoption when that first sort of came out. And I know it's still card-based, so we'll talk about cards for a little bit. Hopefully it won't offend you too much.
No, that's fine.
Because obviously, a lot of the banks were then giving cashback and discounts based on using your contactless card to make payments. So the emphasis very much came from the banks to do it. Now, I'm not saying that potentially that probably may not work in the same way, but if the banks are looking at this and saying, well, actually, open banking payments are much simpler for us because I get to talk straight to a bank with one intermediary, TrueLayer in between, do you think they should come out and start trying to adopt this a little bit more? And is it beneficial to them enough to really want to do that?
Yeah, I don't know. I think they are supportive, and we work really, really closely with the banks. I mean, it's kind of a differentiator is that we're on good terms with them because we need to make this work well for them. In terms of like incentivizing it, I think the smart, where we're seeing interesting conversations at the moment is perhaps even thinking about it in terms of loyalty, right? So, where merchants have loyalty schemes, they're typically going to be saving quite a bit of money on this payment method. So the idea, it's in their interest to incentivize it. And sometimes that idea of getting, double loyalty points on the, for this payment method, or even a discount, is something we're discussing with merchants. More not to, just to kind of kickstart that use case, because I think once people have used it once, it just works, right? And that we see that with returning users, they select it again and again. But maybe it's just to get over that hump slightly of just trying it for the first time. And we work with our merchants quite heavily. What's unusual is we have this rocket launch program where we actually work with them on the UX and design to try and sort of prompt people in the right way. We deliberately white label the experience because we actually think, putting TrueLayer in the middle of all this is confusing. People understand who the merchant is. They understand who their bank is. So actually keeping that really straightforward and white labeled also helps with that experience.
Yeah, I think it's, as you say, it does need that sort of kickstart to go. And I think that's kind of, we were talking just beforehand about sort of America and sort of adoption of open banking payments. They haven't quite got contactless yet. They haven't quite got, they're just still chip and pin and moving that way. And I don't recall or remember any of the banks giving out any incentives or anything to move people away from things. And then if you draw a parallel to, British banks saying, yep, contactless, it kind of kick-started it and then it kind of like took off by itself. Yeah. So, but again, it does need this kind of the whole ecosystem that are involved in it to be involved as well, because you need the merchants to be able to accept it. There's no point, someone saying everyone should do everything by open banking payments, and you go into, a branded coffee shop and say, I want to pay with open banking payments. They go, I don't know what you're talking about.
Yeah.
Not that anybody would, obviously, because consumers shouldn't need to know necessarily that they're using open banking payments facilities. They just need to know that it's a simple version to do it.
Yeah, exactly. I mean, all you need is a bank account, right? So we sometimes get this question, which is a legitimate question, is like, do we have to download the TrueLayer app to make this work? So no, consumers just need a bank account, and everyone has a bank account. So it's actually more inclusive than a lot of other payment methods. And I still think, at the moment, a focus is deliberately on that kind of online e-commerce world. In person is a bit more complicated, almost because contactless is so good, right? Contactless just works. You're trying to fight that ease of use versus, perhaps chip and pin is more equivalent. Although I do think the interesting thing is, if you look at what happened in the pandemic, a lot of people have gone out, particularly, fast food restaurants, where they're trying to push you to their app. So even though you're in McDonald's, you're on their app and you're making an order. That's a perfect use case for open banking payments. Why would you then go, okay, I'll put in my card details on your app, right? When you're in McDonald's, or it doesn't have to be, but any of these places where they're trying to push better customer experience by having an in-store app experience, that would be a really good candidate for open banking payments.
Yeah, as you said, you kind of like want places where people are already halfway engaged in that new process, and just that one extra little step will make sort of all the difference, as it were.
Yeah, and I think sometimes, people have grand visions about how successful their in-store app will be, to scan goods to see how much they cost or see if they've got different sizes or whatever. But payments is really the use case that will get people moving it. If they're like, I can avoid the checkout queue if I just scan and pay and go, that is the incentive to actually kind of use the app in earnestness. So.
That's exactly the conversation I had on Saturday when we were paying for our roast dinner, where it's kind of like, well, we've already paid for it on the app. It's already been done. We can just get up and leave now. I don't have to wait for a waiter or a waitress to come over and ask me to get my card out and tap on the thing. I'm done. We can go now.
Yeah, it's my personal, my wife knows this is my weird personal thing. Like for any type of restaurant, I would much rather pay on the app because, whether it's like having a quick bite in sort of a Nando's or a fancy restaurant, there comes a point where you're like, right, I'm done, I want to leave. And then there's always 10 minutes of mucking around, right? I'd much rather just pay and go instantly. So the more we can move to that will help me personally.
Fantastic. I think we could talk for hours and hours, and we've kind of come up to time now. I wanted to kind of end on a sort of final thought. Where do you see the next sort of 6 months and maybe year when it comes to open banking payments? When do you think that real sort of aha moment is going to sort of happen?
Yeah, I think, without divulging any kind of pipeline that we're working on, I think what's going to happen is more and more people are going to be using it because it's just going to be available everywhere, whether they're doing, today, whether they're doing like investment decisions or even iGaming or those kind of things. But more and more they're going to see it in their checkouts from TrueLayer, but also from other providers. I don't think there'll be a point where people are, the person on the street is conversant with, PIS versus IAS or regulations and these kind of things. But they don't know how cards work either, right? They just know it works, right? So I actually think we're seeing kind of an exponential growth, and that seems always to kind of start slowly but accelerate extremely quickly. I think in a year's time, it will just be seen as a de facto payment method and almost won't be questioned, right? It will be seen in hindsight as obvious. It's like, well, it was always like easier and it was cheaper and it was better for the consumer. Obviously it was going to take off, but at the moment it still feels like we're convincing people one at a time. Although I will add just one thing, even at a sort of open banking conference, someone stood up on stage and said open banking is great but no one can do refunds, and we're like, this is a gap, a misunderstanding in the market. If refunds and reconciliation is available, I think that opens the door to a lot of companies who've been thinking about this.
Yeah. Okay, so that was kind of like, because I have one more question for you, actually. On that same subject, something that came up previously, does open banking as a name need a brand refresh to make people understand it better?
Yeah, it's a good question, and it won't surprise you to know it's a debate that we have internally. And whether we talk about, and on the checkout, for example, our normal suggested language is instant bank transfer, because people understand what bank transfer is, they understand what instant is, kind of Ron Seal does what it says on the tin. I actually think, and we've done a bit of research on this, that the term open banking is the one phrase that maybe people have heard of, particularly in the payments industry and maybe more widely. So I think open banking payments, I think, will be the way we'll be talking about it in the future. But yeah, I'd be interested to see if that changes over time. But I think that is at the level where people understand what it is, at least, without knowing the details, right? I think everyone's heard of open banking, they just don't know what the hell it is often, right?
Quite possibly, yeah. So OBP is the route forward, yeah?
Yeah, what are we talking about? Like data-enabled open banking? Like, yeah, I think it has the advantage of it kind of explains what it does without being too complex. But, yeah, does that mean the average person, even when they're using it, will know that it's an open banking payment? I don't know. Maybe not for a little while.
Fantastic. Unfortunately, we've come to the end of the show. Thank you so much, Roger, for spending the time. We have thoroughly enjoyed the conversation. Could have gone for hours. Thank you very much.
No worries. Appreciate you having me as well. Thanks.
Thank you.
Bye.
Thank you for listening to the Fintech Times podcast. We hope you enjoyed the discussion as much as we did. Don't forget to check us out at thefintechtimes.com and subscribe to our monthly publication to keep up to date with all the latest fintech news.